What's going on, guys? It's Jimmy here. Big news in the US sends interest rates wavering. I'll give you the details here on this. Also, big stimulus packages around the world sends stocks soaring. I'll give you the details here on this. Also, the US looking at this very intently as economies around the world are very, very iffy. I'll give you the details here on this as well and more. Lots of big news here for you guys in this video. Let's jump right in. We are live right now here on YouTube. Let me know if you can see and hear me. Also, let me know where you're tuning in from. Let me know your city, your state, or even your country, as we have people tuning in here all around the world. Let me know in the chat or the comment section down below. Also, thanks so much for hitting that like button for us down below. And if you haven't yet, hit the subscribe button and then the bell icon so you get notifications when we go live, which is normally at 6 p.m. Eastern Standard Time. All right, take a look at this breaking news here. Okay, first up, U.S. job creation roared higher in September as payrolls surged by 254,000 jobs. I'll give you a caveat here in a second here. Non-farm payrolls surged by 254,000 in September, up from a revised 159,000 in August. Better than 150,000 jobs forecasted. Unemployment rate fell to 4.1%, which was actually pretty high here lately, the highest that we've had here in months. Average hourly earnings increased 0.4% on the month and were up 4% from a year ago. Now, the caveat here is that we recently here had a report that the US added 818,000 fewer jobs than reported earlier. The Labor Department issued a revised figure for the 12 months through March that pointed to greater economic fragility. So this is where the government can really trick you. They come out with these reports that are good, and then all of a sudden they say, oops, we changed that figure, and all of a sudden that figure that we reported that was really good, all of a sudden now this came out back in August, so not that long ago. Yeah, we had to change that. So you can see here, yeah, that number that was really good, we had to change it. It's actually 800,000 less jobs than reported. Yeah, so this is where the government can get really, really tricky. And I'm not picking sides here, right? I don't care if you're Republican, Democrat, Independent, from the loony bin or whatever, right? This is just, you can read it right here, right? This is where the government can get really, really tricky, right? So sometimes they come out with these reports and then they revise them later on. So it's plus 254,000 jobs. And all of a sudden later, they're like, oops, it's actually negative 818,000 jobs. Yeah. Meanwhile, what happened here is this can really affect your finances here. So after this jobs report came out, check this out, mortgage rates spiked after stronger than expected jobs report, okay? So the Fed doesn't actually have to raise or lower interest rates for interest rates to go up, down, or sideways, okay? The average rate on the 30-year fixed mortgage rate actually went up instantly. 30-year fixed mortgages is now 6.53%. That's 42 basis points higher than the day before the Fed Reserve cut its benchmark rate by half a percentage point. So interest rates actually went up almost half a percent, 42 basis points, so almost half a percent based on this report. A stronger than expected jobs report, because what this actually means is that they're expected the Fed to continue cutting interest rates, but not at a larger cuts. So maybe 1/4% cuts instead of 0.5% cuts. And the market adjusted according to this, and interest rates actually went up, at least in the mortgage rates. Yikes. And you could see it right here. Yeah, this is kind of crazy. And remember that other things could be affected here as well. Car loan interest rates, credit card interest rates, all these things kind of can fluctuate by the day, by the week, by the month. And we all kind of want to see interest rates come down. I mean, credit card interest rates are still all near all-time highs or at all-time highs. Mortgage interest rates were at, near century time highs, the highest in the 2000s. They were actually at 8% here not that long ago. Now, hovering around 6.5%, even 7% for people with certain credit card or credit ratings. And that's very, very high. It can cost $1,000 more a month than what they were 2 years ago for the exact same house. So interest rates are very, very expensive when they're a lot more money, and it's costing the government almost $1 trillion a year on our debt. Think about that. Also, the port strike has ended temporarily. Temporarily. The two sides have extended their existing contract only until January 15th to provide time to negotiate a new contract. Now, we've seen these type of things fall apart as well. We actually seen when the West Coast port strike, that actually fell apart a couple different times as, the deal just kind of fell apart a couple different times. They have agreed to a tentative deal on wages, which includes a 61.5% raise over 6 years under the tentative agreement, which will extend their contract only until January 15th, which will at least take us through the election and almost till inauguration day, or maybe right until around there. But again, this is just a tentative agreement and could fall through. So I will keep you up to date here on that. But for the time being, this is the headlines that we're seeing. Also, you can see the headlines here. China's stimulus rally. China just passed a massive stimulus package for their economy. If you've seen my recent video on that, I'll link you to that video here at the end of this video. China's massive stimulus package that they just passed, China's stimulus rally has already sent stocks up 25% in their stock market and will affect global economies as well. And there could be more to come. China's equity markets will keep rising after business in the mainland resumes after the Golden Week break, analysts predict. But they face the risk of an ugly reversal in sentiment into 2025. The focus will be on the effectiveness of further stimulus measures as their economy is suffering, as many others are as well. The United States has a lot of weak points as well. In fact, take a look at this. Japan Prime Minister Ishiba tells cabinet to compile a stimulus package as well, as they think their economy needs one as well. Will the United States follow suit, as we're now seeing multiple different countries passing or considering stimulus package? You can see this first one from CNBC, this second one here from Reuters. China, Japan. Will the U.S. be next? And what may be in the cards?
Beijing's recent stimulus packages sending stocks surging in mainland China and in Hong Kong. For a closer look at the economic picture, we want to bring in China Beige Book CEO Leland Miller. His company is out with new third quarter data for this week, and it's forecasting the impact of Beijing's stimulus policies. Leland, welcome. Why don't you tell us what that forecast is?
Well, I think we have to have a very different outlook for short-term asset markets and the macroeconomy. I mean, these are the stimulus package has basically put us headed in two different directions. On the stock market, of course, things are going well. They're going to probably go well for a while longer. It's a short-term put by the government, so they are encouraging everyone to get in. Try to redeem animal spirits and investor spirits, and it's a big cheery several months for stocks. On the macroeconomy, it's a little bit different because I think if you look at what they're talking about doing, and again, very little of this has actually come into effect yet. They're trying to put a floor on the economy. They're trying to stabilize it. They're not reaching for a higher ceiling. So whether it's property, whether it's consumption, whether it's credit, they're trying to do measures across the board that just improve things just enough so that they can basically shift their focus on things they care about a lot more.
It's interesting. We were speaking with an oil analyst yesterday who made that same point. We were asking why, since then we've seen oil prices come up, but that has more to do with commentary.
Yeah, and as you can see here, U.S. crude oil jumps as Biden comments on possible Israel retaliation against Iran. And this is not good news for the U.S. economy and economies around the world. U.S. crude oil has gained about 8% this week, which will send oil and gas prices higher in the U.S. and around the world, as traders fear Israel could retaliate against Iran by hitting crude infrastructure. So oil and gas jumping 8%. OPEC plus spare oil capacity is keeping prices from running even higher, at least for now, analysts say. A strike by Israel against Iran could raise fears of a disruption in the Strait of Hormuz and add a significant price risk premium. Yeah, so let me know your thoughts here in the comments. I will keep you up to date here. If you haven't yet, don't forget to like this video and subscribe down below. Click the bell icon after subscribing so you don't miss out on new videos that come out here every day at 6 p.m. Eastern Standard Time. Click here to see the new stimulus package that was just passed, or click here to see why people are panicking as stores are running out of products. Thanks for watching, guys, and I will see you in